All right, guys, I'm Preston Williams, and this is the Corner Office Podcast where we talk about all things real estate. And this is in association with My Real Estate Game Plan, and this is specifically for home buyers. And what we want to talk about is 5 mistakes that buyers make that can cause them emotional drain, or what I like to call, or a lot of people like to call, buyer fatigue. So what we're going to start off with is the first one, which is looking at homes before getting pre-approved. Now, depending on who your agent is, who your realtor is, they may require you to be pre-approved or may not require that you're pre-approved before you're actively looking for homes. And sometimes this just can be based off that agent's policies or just how the market is at the time. But if you're working with me or a lot of other very experienced agents, and I put myself in the decently experienced, I've been in real estate 5 years, and what you're going to find is that most agents require that you are pre-approved beforehand unless they have worked with you before and they know that you're going to be good to go. But most agents require that you're pre-approved beforehand. The reason for this is because getting pre-approved is not a linear process. It's not a straight line. It's not I talk with the lender and I'm pre-approved in 24 hours or an hour or two, or while you're on the phone, you're pre-approved. It's a lot longer process. It's not like buying a car. And at times it can take a week. It can take more depending on things like how your credit is. Do you need to have anything on there repaired, fixed, removed, or paid off? That can take time, and it has to hit your credit, which can take a month or more. It can be based off your income. How are you paid? If you are a person who has an annual pay, a salary, and you're paid bi-weekly, and there's no things in there like variances, like overtime or anything, and then it can be a pretty quick process. But if you're a person who's self-employed or 1099 worker, it can be a lot more messy on the lender side, and they have to go through all these variances in your income and make sure that the amount they're pre-approving you for is a solid amount, because you don't want a quick pre-approval. You want a correct pre-approval, because you don't want to be under contract to purchase a house at amount, and then once the underwriting starts, you find out that you actually can't purchase at that amount because they didn't correctly verify your income or calculate your income on the front hand. You want to make sure you have a correct one, not a quick one. Or debt, they may need to have debt verified and things like that. They can add on time to how long it takes to get pre-approved. And if you have assets like stocks or crypto or an IRA or 401k, other things like that you want put into your income, then that takes a time to have the lender comb over all that and calculate the various ways in which it needs to be calculated in order to give you a solid pre-approval. So you don't want to look at houses beforehand, because that process can take a while, and the house that you're looking at, that you're going to get pre-approved for to put an offer on, still can sell in the time that it takes to actually get your letter to be able to place an offer on a house. So you don't want to find your dream house, you love everything about it, and you're like, I want this house, but you don't have your pre-approval letter. And now you go to get pre-approved. It takes 3 to 5 days or maybe even a week or more to get pre-approved. And then during that time of you waiting, when you already found the house you're waiting, that house is purchased by another buyer because you weren't ready to purchase at the time that you saw it. Even though you knew in your mind, this is the house I want, you got to have that pre-approval letter, that proof of funds that says how you're going to purchase it. Or you can't get it under contract because there's not a seller, if they're working with the agent, who will put a house under contract if you don't have a proof of funds of how you're going to pay for it. So the next thing is falling in love with homes and wanting to purchase homes and view homes that you find online that's not actually for sale. Now, that sounds a little crazy, and I'm not meaning in like a scam way or there's a scammer out there doing this or that. I mean, you're finding homes that are on Zillow or Realtor.com or Trula or wherever. You're finding these homes and you're finding out that these homes actually are not for sale when you go and send the house over to your realtor in order to go look at it. That is probably one of the biggest conversations that I have learned to have with my clients up front, is about when they look for homes, where to look for them and what to look for. Because we're in a world now to where not only am I looking for houses for my clients are actually actively looking for houses online as well. They're going there at work, they have a little break, they're getting on Zillow, they're going to this, and that. They're not just looking at the houses I send them I think are a good fit, or they're not just exclusively looking at the home portal that I set up for them. They're going to hop on these apps they've been using for years, and they're going to look at houses. And I like to make sure that the houses that they are looking at are houses that they can actually purchase. The easiest way to do that is to look at the status of the house. Each of the listings will have a status. It will either say active, contingent, or pending. If it says active, that means that that home is actively being sold and they are actively looking for a buyer. And that means that you can go and view the house, you can purchase the house, you can place an offer on the house. It's not locked in any way that you can't purchase that house. If it says contingent, then that means that they are not actively looking for a buyer. They have a buyer, and the buyer buying that house is contingent on a few things being fulfilled. So you can't go view the house and you can't put another offer on the house. There's a small chance that it may come back available, but it's not very likely. It doesn't happen often. It happens, but it doesn't happen often. So don't get your hopes up. Don't dwell on that house or wait on that house. Keep on looking, keep moving, keep pushing. But most of all, don't get your emotions set on buying that house, because the chances are you will not be able to. And the last one is pending. If it says pending, give it up. Pending means that they are literally only waiting on the contract to be signed. They may be waiting on the lender to work out some final things, or the closing attorney to have a little more paperwork worked out. But the buyer has fulfilled everything. They're ready to purchase. The seller's ready to sell, and they're just waiting, playing a bit of a waiting game, waiting on the closing date to get there. It's very rare that a pending house comes back available. So if it says pending, just give it up altogether. It's going to be gone at some point. So you want to make sure you're looking at active homes. That way you're not getting emotionally invested in homes that can't be purchased, that's not available. Number 3 is planning for the now and not planning for the long term. So when you're buying a house, it's a long-term investment. It's a long-term thing. You're not buying a house now and gonna move within 1 year. You're gonna be in that house typically around 5 years. That's normally when people will sell and upgrade or downgrade. They're around 5 years, but you could be in that house for 10 or 15 years. And you want to make sure that whatever your plan is now and what you're purchasing right now also will work for you in 5 to 8 years too. So the easiest way to do that is, let's just, for example, you're a newlywed couple and you're buying a house, you just got married, and it's just you two. And it's like, okay, it's just us, a 3-bedroom and 2-bath, a 1,200 or 1,400 square feet condo seems really good to us. You know, this works out great. We like the nightlife, you know, the downtown atmosphere. But then you also have in your plans within a year or two attempting to have a child and adding on to the family. So you don't want to just think about where you are now and what you're doing now. You want to think about where you will be at the time that you're adding that child as well. Because at that point, having a newborn at a condo downtown may not be ideal for you. Think about the parking. Think about carrying the baby up and down the stairs, or getting the baby up with groceries and things like that. And if that's ideal for you at that time, it could work for you, it may not. But you want to make sure that you consider the lifestyle that you're going to have in a few years, as well as the lifestyle you have now. And whatever the time frame is you plan on moving or purchasing again or selling or whatever, be sure you add on at least 3 years onto that. So if you have a plan to be in this house for 5 years, make sure you're thinking 8 years in advance, because when 5 years comes, you may not realize how quick that came, and you may not be ready to move. You may say, hey, I like this house. It has more of what I want, and I'm not ready to move yet. I'm not ready to go through the home buying and selling process again, because I'm not ready to get out of this house. 5 years went quicker, so you end up staying longer. But you don't want to stay in your house and be pushed to move just because you didn't plan out far enough of how your lifestyle would be at that point. So think about where you'll be in 5 to 8 years or whatever your time frame is, add on 3 years, and then think about where you'll be at that point and if these houses you're looking at are good fits for you. Number four is not locking on to your deal breakers and your must-haves. You want to do that before you look at a single house. You want to make sure that you know what your deal breakers are and what your must-haves are. Your must-haves means that no matter what else the house has, if it does not have these items, then you will not buy this house. Now, don't confuse must-haves with wants. Must-haves are needs. If you must have a garage or you're not buying the house, it could have everything else you want, but if it doesn't have a garage, it's out, then that's a must-have. If it must have a walk-in pantry, but you will give that up for another thing, then that's not a must-have. That's a want, and put that in the want category. You want to be sure you separate your must-haves and your wants, because must-haves means that it's a deal breaker from day one. You don't even need to look at the house because it doesn't have this item. Those are typically things like a backyard. Typically things like a fence around the yard, because fences can be, depending on the yard size, fences can be a $12,000, $15,000 expense. And if you're not willing to put one up and you have dogs or little kids and you know you have to have a fence, then that can be a must-have a deal breaker for you. If it must have a garage, then that's a must-have. If it must have 4 bedrooms because you have 3 kids and it's you and your spouse and you want everybody to have a bedroom, or it's a deal breaker, that is a must-have. Your deal breakers are the other sides of your must-haves. Your deal breakers are if it has this or doesn't have. If it has this, then it's a deal breaker, such as if it's in a neighborhood that has a high crime rate. That's a deal breaker. It doesn't matter what the house is, how perfect the house is. It has all my must-have, all my wants, but it's in this neighborhood that I don't want to live in, then that's a deal breaker. The price could be a deal breaker. It could be a number of things, but you want to make sure you outline those and you're being realistic with what's actually a must-have and what's actually a deal breaker, because there's a difference in your wants and your needs, your must-haves. And there's a difference in things you don't like and things that are deal breakers. Number 5 is not setting realistic expectations. This is huge because this is the most important thing that you must do in order to have a successful and pleasurable home search. You must set realistic expectations for what your budget can afford, you can purchase. You don't want to have an expectation to find a new construction house in the historic district of the city. That's not a realistic expectation, because just by the default of what they are, they're complete opposites. The historic district is going to be a lot of older homes. It's going to be a lot of aged homes. They're going to be 100 years old or more. It's going to have a lot of history there. You're not going to find a new construction in that area because that area is based on the age of the houses. So you want to be realistic in the expectation if you want that neighborhood, what you're going to be purchasing. Or if you want a new construction, you want to be realistic in where you can purchase a new construction house and target those areas. You want to be realistic to what your budget can afford you as far as amenities, size, style, and neighborhood. Because it's kind of a bit of a triangle. You have the house, you have the neighborhood, you have the price. You can usually get 2. You can typically get the price you want and the neighborhood you want, but you may not have the house you want. You may be able to get the house in the neighborhood, but it may not be at the price you want. You may be able to get the house and the price, but it may not be in the neighborhood you want. You can typically get 2 because unless you're just saying, I just want the nicest house in the best neighborhood and I'm willing to pay the most in the neighborhood for it, you're probably not going to get all 3. So you want to be realistic. You want to be realistic to what your budget can afford. You don't want to say, I want items 1, 2, and 3, but items 1, 2, and 3 are common to houses that are $800,000 and you're purchasing at $500,000. Because if those houses that are priced at $500,000 had the same amenities and neighborhood as the houses that are $800,000, then one of those are priced off. That either that house that's $800,000, it needs to be $500. Of those houses that are $500 need to be $800. But you're not gonna find the amenities you find for more money in houses that are priced less. And you want to be realistic with those. The easiest way to do that is to hop on just a website before you even start your search and just kind of browse at least once a week houses in the price range you're aiming to purchase in, just to look at what's out there, what's actually out there, and get an idea of what's available out there. And when you're looking at these houses, look at houses in the price range. Don't go higher than the price range and then hope to find a house that's priced lower than that price range in the same style of house. A $300,000 house is going to be a $300,000 house in that neighborhood. It's going to vary a little bit on how nice the house is and what it has. It's going to vary a little bit, but they're going to be in the same range. $500,000 house will be $500,000 house. It's going to vary a little bit, a 10, 20, 30,000, but it's not going to vary by $100K. You want to make sure that you are having realistic expectations on what your money can afford and what you can purchase and where. So those are the 5 tips that I have, and these are conversations I have with all my clients up front in order to make sure they are doing these things and make sure that they are thinking long term and having a correct expectations and targeting the right houses and looking for houses the right way. And just as you are preparing your journey of starting to buy a house, I want you to know this up front, and maybe it can make your journey a little bit easier and a lot less stress. There's a thing called buyer fatigue, to where you're going out and looking at houses, you're having deals rejected, and you just get tired of the home buying process. And doing these things will help you not get to that point to where you're just like, I'm done, I'm out of here. So until next time, I'm Preston Williams, and this is the Corner Office Podcast in association with My Real Estate Game Plan, and I hope that it helps you on your journey. All right, team,